Global markets after the U.S. Federal Reserve shot down talks of pivoting back to interest rate hikes. Shortly after Fed Chair Jerome Powell had finished telling reporters the Fed may have to leave rates elevated, the Japanese yen surged against the dollar in its second suspected intervention-fueled leap of the week. Locally, Sasol CFO Henry Rousseau has tendered his resignation and will step down after little more than 2 years on the job. Shares in Sasol were down about 4% this morning and have lost almost 15% in the past month. All the focus will be shifting to Apple's results, with analysts bracing for a big drop in sales and waiting to hear how the company plans to embed AI into its iPhones. To give us perspective on the markets, we are joined by Mohammed Wagley, who is a portfolio manager at Sasfin Wealth. Mohammed, thank you so much for your time. We've had that Fed meeting. We listened to some of the responses during that press conference. What's market sentiment right now?
Well, I think you'd be surprised to note that we were quite positive on the back of Mr. Powell's comments yesterday. With reference to Tuesday's performance locally, it wasn't the best day. We lost about 0.5%, and I think that was really largely driven by sort of concerns about the FOMC meeting on Wednesday. So it's good to see that this morning we've actually opened up quite a bit stronger. We've probably gained back most of those losses, and I would say that by and large that's on the back of Mr. Powell's comments yesterday.
Let's talk about those comments. What did you make of the communication, the tone, and were there any key takeaways for you?
Yeah, so I would say that, like with sort of the other meetings this year, really what was the key takeaway was the guidance that they provided. I think by and large consensus was that they wouldn't be cutting rates this month, and they more or less delivered in that sense. But I think the more prudent question is, when can we expect to start seeing some of those cuts? Now, to this extent, Mr. Powell noted that there'd been a lack of progress in terms of getting close to that 2% inflation target, which was a bit of a dampener. But I think what he did say that the market did quite like, and you mentioned this earlier, was that we're not expecting any rate hikes despite this lack of progress towards that 2% inflation target. So really the long story short in my mind is that we didn't get any new bad news. We're pretty much where we were sort of before the meeting, and now we continue to wait and watch the data that comes out going forward. We've got jobless claims numbers for the US, I think perhaps a bit later today, and then we've got unemployment data again on Friday, and that'll sort of form part of the data-driven approach that the Fed is employing. So it'll be interesting to see where we stand when those numbers come in.
It's quite interesting when we talk about the Anglo BHP developments. You have Mark Bristow, who is the CEO of Barrick Gold, saying that he's not interested in bidding for Anglo. They've got their own strategy going on. But let's come back to the BHP Anglo developments. If we're to look at Anglo, I mean, we had the CEO saying that they are looking to simplify their portfolio at some point. I mean, do they really have to demerger Kumba Iron Ore or the other Amplats in order for them to unlock value?
Well, it's a good question. It's an interesting one. Now, I think a lot of this sort of narrative came up on the back of that BHP sort of proposed merger. But, if you sort of cast your mind back to February when the Anglo numbers come out for the year ending and we see sort of a 94% drop in profit, they mentioned substantial write-downs in diamond, in nickel. They did point to the fact that they need to sort of restructure their portfolio mix going forward in sort of a more optimal way. Now, obviously, when BHP comes in with a bid, as you mentioned, that is sort of contingent on the unbundling of Kumba Iron Ore and Anglo American Platinum from Anglo American. And I'll also note that BHP isn't necessarily too happy about the holding that the company has in De Beers. They noted that if the merger were to go through, then, that will be something that they need to review as well. From my view, I would say independent of what is going on here with the acquisition, I think Anglo's is in need of a bit of a restructure going forward. So that mix that they have needs to be optimized for the commodity environment, for the next 24 months or whatever it might be. So whether or not that BHP acquisition happens, I'd expect to see quite a bit of movement in that regard. And I'd expect, analysts to be looking with a bit more of a sort of magnifying glass at some of the performance of, the actual sort of Anglo composition going forward, and maybe less so the general sort of commodity movements. So I think all in all, I would say that, this was really going to happen. Anglo's came out and said that we need to take a look at this, and then the news from BHP kind of just reinforced and then accelerated that need to restructure and I guess optimize on Anglo's part.
What's your sense of the way our local equities have been performing versus global equities?
Well, I think not just myself, I think everybody would really be surprised to hear that, since the start of this quarter, which is really since the start of April, we've actually gained about 2%, and conversely, the Americans, the S&P 500 lost about 4% over the same period. But if I take a slightly longer view, in 2024, we're really still down on the year. I think we're down about 0.75%. And then when you contrast to the S&P 500, they're up 5.2% on the year. The Europeans have done even better. The Euro Stoxx 50 is about 8.5% on the year. And then I must note the stellar performer for the year has actually been the Japanese. Their Nikkei 225 index is up about, almost 15% this year. So it's quite interesting to see sort of what has happened thus far this year. I think in terms of, where do we go from this point on? I think it makes sense given, sort of the elevated interest rate environment. It does make a lot of sense to mitigate, well, at least in my mind, to mitigate away some of that downside risk by holding as high a quality company as you can, because those qualities, I think intuitively speaking, can just stomach the higher interest rate environment for a bit longer than the smaller players. And I think, unfortunately, within those metrics, within that context, it is much easier to find those players abroad, within the US and Europe and some places in Asia as well, than it is to be found here within the context of South Africa.
All right, Mohammed, let's leave it there. Thank you so much for your time. That is Mohammed Wagley, who is a portfolio manager at Sasfin Wealth. And of course, on Monday, we've got interim results from Redefine, as well as Goldfields releasing their quarterly production numbers the following day on Tuesday.